dear governors, friends, and David Lipton. It's a great pleasure for me to welcome you to this evening's dinner in Kuala Lumpur. Our ASEAN meetings has already commenced today with the Deputy Ministers of Finance and Deputy Governors meetings. The ASEAN meetings is currently taking place at an important juncture for our region, as concrete plans are being advanced to achieve an ASEAN economic community by this year. This year is hence a very important one for the region. The AEC blueprint adopted by ASEAN leaders in 2007 envisages ASEAN to become a single market and production base that is characterized by free movement of goods, services, investments and skilled labor, and freer flow of capital. Despite the recent global financial crises and periods of uncertainty in the global financial system, the drive for this vision remains resolute. This is well supported by the prevailing strong foundations and tremendous prospects for our region. It is further reinforced by the current efforts to develop the ASEAN community's post-2015 vision. The people in this room, from officials, the private sector and academia, all have a significant role in advancing this journey to closer economic and financial integration. The ASEAN economies have come a long way. We have now reached that defining stage of development whereby greater regional economic and financial integration will contribute to further our growth potential. We are aware, however, that the environment in which we operate has become increasingly more complex and challenging. Nonetheless, we have recognized the benefits of coming together to collectively manage these challenges and unlock our full potential by accelerating this integration within the ASEAN region. Ladies and gentlemen, tonight we have the honor of having a guest speaker to speak to us this evening on this very subject, ASEAN, the challenges of convergence and integration. Mr. David Lipton is currently the International Monetary Fund's first Deputy Managing Director. He has been in that role for more than 3.5 years now, since September 1, 2011. And before joining the International Monetary Fund, Mr. Lipton was Special Assistant to the President of the United States and served as a Senior Director for International Economic Affairs of the National Economic Council and National Security Council at the White House. Mr. David Lipton has a long, distinguished career in international finance, in the private sector, in the US Treasury and in academia. While at the US Treasury, Mr. Lipton helped lead the Treasury's response to the 1997-98 financial crisis in Asia and the effort to modernize the international financial architecture. He thus knows this region very well. As the region pushes towards greater integration, we can benefit from the lessons from the regional integration efforts in other parts of the world. I'm sure we'll benefit from Mr. Lipton's insights. I should also add that within international circles, Mr. Lipton has been described as a very careful thinker, very professional and objective in the way he analyzes options and giving advice. He's also known as one who is exceptionally good in getting things done within the country's socio-political constraints. We can therefore look forward to an enlightening address by Mr. Lipton. The program for tonight is for dinner to be served, and then it will be followed by the talk during the dessert and coffee. with that, let me once again welcome you to these ASEAN meetings and hope that you will have some time to experience Kuala Lumpur during your stay here. Thank you very much.
Everyone, it is very hard to follow such a tremendous violin performance. And I know that at this hour, and after such a splendid meal, everyone's looking forward to a good night's sleep, and that it's my job to make sure you don't start too soon, and I will do my best. Well, it's an honor to be here in Malaysia and to speak to this gathering of ASEAN Central Bank governors and officials. You represent an organization whose purpose has evolved tremendously in the nearly 50 years since its founding. But through that period, there's been a constant dynamism and growth of your countries and your region. I'd like to start by thanking Governor Zeti for giving me the opportunity to be here tonight and to speak to you. Governor Zeti's vision and leadership have helped establish Bank Negara Malaysia as one of the most capable and highly regarded central banks. She's been instrumental in shaping and strengthening Malaysia's macroeconomic and financial institutions, facilitating strong growth and encouraging inclusion, which we spoke about earlier today when we met. I'm told Governor Zeti is writing a book on her long and distinguished career. I'd very much like to get my hands on an advanced copy to see what lessons that she has for us. Tonight, I'd like to talk about economic convergence and ASEAN's future. By convergence, what I mean is the decades-long process by which ASEAN countries will raise the living standards of the region to join the ranks of advanced countries. This is a timely issue for ASEAN. While your 10 countries and 630 million people are at diverse stages of development, millions have already ascended into the middle class. But there's still a lot more to do. Tonight I'll talk about the potential for ASEAN countries to achieve convergence and a little bit about what it will take to reach that goal. Let's begin by considering our host country, Malaysia. 20 years ago, Malaysia's GDP per capita was about $3,500, about 1/6 that of the United Kingdom. By last year, GDP per capita had risen to about $11,000, about 1/4 that of the United Kingdom. Now, Malaysia is targeting high-income status by 2020, with per capita income rising to about $15,000. And that's a goal that's within reach. But with a sustained effort, including pursuing further reforms, an agenda that I'll talk about tonight, Malaysia's income level in 2040 could surpass that goal and essentially approach the level of the United Kingdom. Of course, full convergence with advanced economies is a more distant goal for some other ASEAN countries. The frontier economies aspire to join the ranks of emerging market countries. That too is an attainable goal. Well, needless to say, the challenges of convergence depend on developments in the global economy. They're not just about what countries do themselves. So let's start with a review of where we are right now in the global economy, and then we'll turn to ASEAN's own challenges. I'm sure everyone here is well aware that global growth has been weak since the 2008 financial crisis. In fact, we've, at the IMF, had to repeatedly revise downward our forecasts. We now expect global growth to be about 3.5% this year, rising to about 3.7% in 2016. One key factor on the minds of many here in Asia is the slower growth of emerging market countries. China's deceleration has already had an impact on the global economy, and their growth is expected to moderate somewhat more this year. But many other emerging market countries are seeing their growth and their growth potential slow down. Another factor, though, is the divergence among advanced economies. Europe continues to struggle, although there are signs that the economy there is strengthening and pulling out of recession. Japan has achieved only modest growth. But the U.S. is gaining momentum with added support from lower oil prices and from Fed policy. Oil exporters, including some of you, are feeling the pinch of lower prices. But it's giving a lift to those of you who are oil consumers, and there are more consumers in the room than exporters. Lower oil prices will reduce the pressure on current accounts, on inflation. Overall, our analysis at the fund is that the impact of lower oil prices on net will be positive for the global economy. But still, there are significant global risks, particularly volatile financial markets, and pressures that could arise from large movements among key currencies, a phenomenon we really haven't seen for many years in the global economy. But despite those risks, ASEAN's recent performance has been impressive and is likely to continue to be so. ASEAN's grown 6.5% annually since the 2008 crisis, although it's growing somewhat more slowly now. Your resilience reflects the dynamism of your urban middle classes who are driving consumption and investment and making up for the loss of external demand. ASEAN also remains a magnet for foreign direct investment, as well as portfolio flows, hitting a record high of $125 billion in 2013, 9% of the global total of capital flows. But you'll all know that your outlook is not without risks. We can't rule out that volatile capital flows related to geopolitical tensions or uncertainty about oil prices or about interest rate policies in advanced economies may cause tensions in your countries. Well, let's relate the global picture back to the convergence challenge. Important economic forces have been driving ASEAN convergence. Export-led growth and industrialization have benefited the region, and more recently, domestic demand as well. IT innovations are bringing change to manufacturing, to infrastructure, and to services. No doubt the process of convergence is a long one. It will extend over several decades. At base, convergence is about raising worker productivity and closing gaps in technology, infrastructure, education, and financing. But that will require, to make the most of it, the best of it, will require a range of reforms, of further reforms. For example, scaling up infrastructure investment, raising educational attainment, speeding up structural reforms and transformation, and removing impediments to trade and investment. Let's take a look at some of the potential sources of productivity growth that will drive growth and convergence. Perhaps the most basic building block, and the one that the IMF is always focused on, is macroeconomic and financial stability. Here, your policies have been effective, including expansionary monetary and fiscal policies needed after the global financial crisis in 2008. And where the counter-cyclical response to the crisis raised government debt, fiscal adjustment is now being applied. Some of you are taking advantage of lower oil costs, lower oil prices to cut fuel subsidies and responding to declining energy revenues in your budgets with broad-based taxes like Malaysia's new goods and services tax. But these fiscal reforms also require targeted support for the needy to assure equality. Meanwhile, monetary policies are more accommodative or are on hold, reflecting the weaker global growth and continued unconventional monetary policies in the advanced economies. I know you're all well aware that these circumstances could change quickly, and there's a need to be ready. You've also prepared to defend against volatile capital flows. This is reflected in your successful use of macro-prudential policies to address the risks from rapid increases in credit and increases in housing prices. At the regional level, there's been progress creating a financial safety net, including the renewal of bilateral swap arrangements, doubling the resources of the Chiang Mai Initiative Multilateralization, and strengthening the ASEAN +3 Macroeconomic Research Office. So beyond macroeconomic policy, what are some of the reforms that will contribute to convergence? First is your ongoing structural transformation. This has been led by the expansion of modern farming methods, industrialization, and export-led growth. These trends are absorbing surplus rural labor, spurring urbanization, expansion of services, and far-reaching changes in family and social institutions. Here in Malaysia, for example, 2/3 of people live in urban areas, and services and industry now represent about 80% of the economy. But other ASEAN countries still have large traditional farming economies. Thailand has a disproportionately high labor share in agriculture, largely unchanged over the past 15 years. A second area where reforms can accelerate convergence is closely related: upgrading labor force skills and raising the level of participation in the labor force. In a global economy increasingly driven by technological innovation, a skilled workforce is essential. That means that the educational system needs to keep pace with economic and technical change. But you'll also be confronting demographic headwinds that will accompany convergence. An aging society is already an important policy concern in Singapore. More of you will face that soon. One solution, or one approach, is to raise the participation of women in the workforce, an initiative that we now see being embraced in Japan, which has a similar challenge. Closing infrastructure gaps is the third factor that's key to convergence. The Asian Development Bank has estimated that Asia's infrastructure needs are around $8 trillion over the next 10 years, of which about $1 trillion is here in ASEAN. Our World Economic Outlook examined this issue last year and found that infrastructure investment can raise potential output and be self-financing when there's slack in the economy. Many countries have the fiscal space to scale up infrastructure investment, but they need public financial management systems to ensure that that money is spent well. Encouraging homegrown innovation is the fourth important element in accelerating convergence. Innovation requires talent, funding, tolerance for risk-taking, entrepreneurship. Also key are the protection of intellectual property rights and a level playing field. Interestingly, despite relatively strong growth and increasingly sophisticated exports, ASEAN's total factor productivity lags that of Korea and Taiwan, which are both climbing toward high-income status. That partly reflects the success of Korean and Taiwanese firms in leapfrogging the frontiers of technology at a relatively early stage of development. That's an issue now being addressed here in Malaysia. The share of R&D spending in the federal budget is being gradually raised, and attention is being paid to creating successful partnerships between universities, the private sector, and government ventures. But for these policies to succeed in any country, there needs to be a balance between support for startups on the one hand and micromanagement or favoritism on the other. The most successful innovators emerge from an ecosystem in which success happens side by side with failure. Free trade and economic integration also play important roles in supporting growth and convergence. ASEAN trade is largely free of tariffs, but further progress is still needed on non-tariff barriers, especially affecting services, and in removing obstacles to investment. Recently, there's been an increase in trade of finished goods within ASEAN. This intra-regional trade should intensify with further integration and the launch of the ASEAN Economic Community. Regional trade agreements, such as the Trans-Pacific Partnership and the Regional Comprehensive Economic Partnership, should also help reduce non-tariff barriers and promote trade. By some estimates, gains from such arrangements range from about 2% of GDP for Singapore to potentially over 6% for Malaysia and even 12% for Vietnam. There's an important role for the ASEAN Secretariat to play in promoting regional integration, and the IMF is willing to work with the Secretariat on issues of mutual interest in that area. Greater financial integration can also contribute to growth and convergence. If managed well, it can accelerate financial deepening in the region. Larger, deeper, and more liquid financial markets help lower the cost of capital, improve resource allocation, and enhance diversification of risk and resilience to shocks. It also helps to lengthen the maturity of financing and improve trading and settlement practices. Financial deepening can help enhance growth, increase employment, spread financial inclusion, and raise living standards. Greater financial integration could also help you overcome the present fragmentation of national financial sectors that's caused by national regulations and the absence of mutual recognition and common disclosure requirements. So it's important that the ASEAN economic community takes on the question of regulatory harmonization and works to strengthen policy coordination. Financial integration will also help ASEAN's less financially developed economies in their own process of convergence. They, after all, stand the most to gain. Now, we know that there are risks that come with financial integration. Rapid credit growth that accompanies financial development can negatively affect macroeconomic stability if regulation and supervision don't keep up, and that's happened here before. In addition, Europe's experience is relevant in considering the integration path ASEAN chooses to take. An important lesson is that monetary and financial integration without fiscal or political integration is fraught with danger. Over time, ASEAN will be well served by adopting a measured, gradual, and evolutionary approach and making sure that it learns the lessons of those who've tried this in other parts of the world. The experience of the past 20 years offers many lessons about the risks of market volatility in a globalized financial system. So we welcome your efforts to strengthen the region's safety net to address future balance of payments difficulties. Your decision to double the Chiang Mai initiative to $240 billion and ratify a crisis prevention facility was an important initiative. The IMF's committed to strong cooperation with you and with your institutions. Collaboration's being strengthened already in areas of surveillance, liquidity support arrangements, and capacity development. The decision at last May's ASEAN Plus 3 meeting to endorse guidelines for further cooperation with the IMF, we consider an important step. Let me wrap up by saying ASEAN is really one of the great success stories, economic success stories of the modern era. In 2 generations, you've risen from poverty to prosperity. In doing this, ASEAN has set an example for developing countries around the world that aspire to economic progress like yours. Steady macroeconomic management, economic reform, liberalization, along with investment in innovation, have already allowed great progress to be made. And now it's time to pursue the next stage, convergence in living standards to those of the advanced economies. The IMF looks forward to working with you as you seek this goal. Thank you very much.